Armando. Thank you very much for talking to us. Much has been made of the sovereign debt crisis recently. How big an impact did it have on private equity?
Simon, it's a pretty big impact because if you remember that after 2007, 2008, after the crisis, we had 2009, which was really pretty bad, like crossing the desert in private equity terms. Many people didn't invest, a lot of capital overhang built up. And then 2010 got a little bit better with more money raised in Europe finally. And then 2011, we're all hoping finally would be the end of the crisis, end of the tunnel. And so the new sovereign debt crisis actually hasn't helped at all because we are now back, one step back, and the denominator effect is big again, and capital overhang is a problem again. So it's really tough for a number of investors, not all of them, for a number of them really, which means less money in Europe at the moment.
How important are emerging markets within private equity these days?
So emerging markets are important. I was in the US in June and I spoke to a number of LPs there. And the story goes, they are either going back to investing in the US or are very excited about emerging markets, which obviously is not good news for Europe, for European funds, because Europe is perceived as a sort of a not very much growing and Eurozone crisis type of situation. But Brazil, China and India to some extent are very appealing for the time being. Everyone is going to Brazil. Turkey to some extent as well, but really it's all emerging markets, with obviously with all due considerations for risk. Some people go into listed equities instead of private equity at the beginning, but yes, emerging markets are growing in importance.
What role do you envisage fund of funds playing within an investment portfolio?
It is a tricky one because fund of funds, you need to look at performance. Fund of funds play a very important role in the industry because they are very professional. They have structured portfolios. They are very deep in their due diligence. So definitely they give investors something that would be very difficult to find elsewhere. However, you need to really look at them as a continuum of performance and then see who has performed well. And so that the best performing fund of funds will definitely continue to have a role. The others, I think, will, and the smaller one and the less performing one will have problems continuing. So it's definitely positive, but with a caveat.
And finally, increasing regulation, a positive thing or a negative thing for private equity?
Very briefly, I think negative, unfortunately.
Why is that?
Well, there was a bit of a debate today at Capital Creation, and I think the general consensus in the audience is that excessive regulations is not. Regulators are often one step behind, and often don't have a full picture of the way the industry dynamics go. So it doesn't really favor flow of capital and high returns in the industry, because it is a way of putting some brakes in the system. So that's why.
Armando, thank you very much.
You're welcome.